Hi, this is Andy Hoffman, Media Director of Miles Franklin Precious Metals in our 25th year in business. It's Thursday, June 12th, midday, and the title of today's audio blog is End of the Black Swan, Almost. I wasn't actually going to do an audio blog this week, given that I've done 5 podcasts, including my first with the great Greg Hunter, and I have an SGT podcast I'm taping this weekend. However, some crazy events are going on. I just wanted to put out a few thoughts. Starting, of course, with our favorite propaganda term, the weather. Okay? At some point, when are we going to give up on this, believing that the weather is the reason why the economy is so bad? As we know, the holiday spending season last year was the worst since 2009, since pretty much the bottom of the crisis. And as, of course, the holiday spending season is during the winter every year. But after that, we talk about the first quarter, and they say, oh, it was worse weather than usual. That must have been the problem. Of course, what I wrote in Mother Nature's Had Enough shows that it really had very little to do with the economy. The problem is that business is far weaker now than it was 5 years ago and has not recovered at all. Just look at a chart of home sales or housing starts. It's the exact same situation. And the same goes with flights. It's not that more flights were canceled than usual. It's that there's been less flights for many years. But anyway, we talk about the first quarter estimates, and I can't emphasize enough, when it comes to any government data, you should completely ignore it, because if it's not a lie, it's going to be revised down the line. My favorite is employment, which gets revised in what they call benchmark revisions once a year, where they may say, oh yeah, it was 200,000 jobs last year. Well, now it's minus 200,000 jobs. We're telling you that in hindsight. But anyway, all these brilliant analysts, as they always do, had forecast 3% GDP growth in the first quarter, somehow not incorporating the fact that maybe there would be weak weather into that estimate. And it came out at plus 0.1%, which of course was probably a lie to start with. Anytime you see plus 0.1 or plus 0.2, like the Europeans are always putting out, you know that they were just fudging numbers to make it look positive. But anyway, then they reduced it to minus 1.0%. And I see now JP Morgan just said it, the final number will probably be closer to minus 1.6%. And remember, that number also includes a full percent of spending related to pre-Obamacare spending, which is certainly not productive. In other words, the economy was 5 or 6 percentage points worse than what the analysts were expecting. And I would think that they incorporate winter weather into their forecasts. Given that I was an analyst for 6, 7 years, I can tell you, of course they did. They just missed how bad the economy actually was. Now, and of course, not only are the economic data revised, but some of them are just flat out lies. And as we learned last week with the ISM manufacturing survey, which was revised first up and then down within a matter of an hour's time, they don't even have a clue what they're writing out there. And they're seasonally adjusting yes-no answers. Anyway, other factors involved that refute the weather. Did people realize that first quarter retail sales were worse online than in stores? Meaning there was cold weather, but somehow there must have been cold weather in people's houses because they were shopping even less at home than they were in the stores. And guess what stores did really well during that horrible winter? Porsche, Tiffany's, Coach, Maserati. Yeah, the 1% that had the money, they didn't seem to have a problem going out in the cold. And then we saw April retail sales come out, when weather is pretty warm. And today, May retail sales came out. Well, guess what? April retail sales were flat, and so were May retail sales. So we've seen absolutely zero recovery in the actual economy, despite what some of the diffusion indices that the government arbitrarily puts out might say. Oh, and I even forgot to talk about the fact that with our plunging real estate sales, the areas that had the biggest plunges in real estate sales in the first quarter were not the Northeast, but the Southwest and the West, where the weather was nice. So again, the issue, the whole part about the weather propaganda, I think is going to come to an end soon. And when it does, and Whirlybird Janet admits that, like Mario Draghi, the U.S. economy is collapsing, That will be the end game for the whole recovery propaganda, the whole weather propaganda, and potentially the cartel as well, because there will be no more belief anywhere that there's going to be tapering or anything but QE to infinity. And frankly, I'd be shocked if this doesn't occur sometime this year. And again, as I said with Draghi, it goes for everywhere. It goes for Europe. Draghi pretty much admitted it last week that there's no recovery. Negative interest rates, brought back the LTRO bailout program for 400 billion euros, brought back the unsterilized S&P QE program, which for some reason people aren't talking about. Japan, 240% debt to GDP, 0.6% interest rates because the Bank of Japan knows it has to keep them at zero. So much so that no one is even trading in the second largest bond market in the world. This sales tax increase has been so onerous, as we predicted here, that investment and retail sales have since plummeted to levels seen in the weeks after the tsunami several years ago. And then, of course, you have the central bank doubling the money supply following 10 previous failed QE programs. What are they going to do next now that CPI inflation is surging? And you need to look any further than approval ratings for presidents to know how well the economy is actually doing. I see Obama's rating hit an all-time low today. We know Shinzo Abe's did, and you can bet that anyone in Europe, I know Francois Hollande's is at an all-time low, and pretty much the same across the board. Look at the results of those European parliamentary elections a couple weeks back. Now, the title of today's audio blog is End of the Black Swan Almost, and the reason is that nothing surprises me anymore. Well, almost nothing, but pretty much nothing. When you're talking about a world that is this corrupted, economies that are this weak, markets that are this manipulated, how can anything be surprising anymore? I mean, we went to Iraq 12 years ago under false pretenses of weapons of mass destruction and that Saddam Hussein caused 9/11, which at the time I knew was wrong, and I've written about it many times. And here we are, 2 years after the troops leave, and what do you know? As we call it, Al Qaeda, but more likely just angry people over there, in large part because we broke up a nation that was being held together by Saddam Hussein, are rampaging and taking over, trying to take over the country. It looks like the second largest city was taken over by what we call insurgents, but I would just say a faction of Iraqis, and they have commandeered the largest oil refinery in the nation, causing oil prices to surge. Of course, the Iraqi's puppet government just begged Obama for help, and right away he says, I agree, there will be short-term immediate actions that need to be done, and we're looking at all options. So my God, are we going to be going back into Iraq again? And are we going to go into Syria? Are we going to go into the Ukraine? Which, by the way, doesn't appear to be de-escalating given the massive murders. And today there's a firefight between Russian and Ukrainian forces. I don't know about all this. To me, de-escalation has about as much shelf life left on it as recovery and tapering and the weather. And the same goes for the shelf life of the gold cartel and its manipulation. I mean, how many more mainstream people and outlets are going to have to talk about it before it becomes real, before people realize it? Today I see London Metals Exchange CEO says gold fix may be open to manipulation. Oh, really? So this is the main manipulators basically talking about how it may be manipulated. I mean, how much more obvious can it be to the entire world right now? But there are some things that do shock me, and I even got it wrong in today's or yesterday's piece when I said that I thought the government would say that the 30-year bond auction today would be weak because they needed to get interest rates back above that 2.6 level that I wrote about in 2.6%. Enough said. But shockingly, after week 3 and 10-year auctions the last 2 days, today's 30-year bond auction for treasuries was the best of all time. People wanted 30-year treasury bonds so much that it was the lowest amount of offtake that the primary dealers had to take, meaning the rest of the world wanted them so bad. Who's the rest of the world? I don't know, but I guarantee you it's not Belgium. This is someone else who knows that the government is getting ready for a QE to infinity, or as I call it, the most damning proof yet of QE failure. This is a major, major blow to the recovery propaganda scheme, in my view, because as I've said all along, everyone knows what's coming. And this should be a clarion call. I can see gold and silver up today. Comically, gold is up exactly 1.0%. So don't think for a second the cartel is not going to fight this to the death. But this is a major, major issue because the 10-year yield is now down to 258 as I write. And again, if they can't hold the line here and rates start plummeting like they are doing so everywhere else, it won't be long before Whirly Bird Janet has to admit that the whole tapering and recovery thing is a sham. Well, anyway, look, I wrote this week an article called "Most Dangerous Economic Environment of Our Lifetimes," and I couldn't be more more vociferous than that, especially when with these incredible bubbles having been created by all the money printing, which, as I call, the greatest manipulated disconnect of all time. It's not going to end well. It's going to end in real losses, be they whether they're due to a crash or hyperinflation in essentially all the paper securities of the world. And I wrote surging debt yields, yields limitless PM demand, because fiat Ponzi schemes can do nothing but create parabolic increases in debt, which is what we're seeing right now. Well, hope it wasn't disjointed, but just want to get a few thoughts, and that's enough for today. And as I say always, I hope you're starting to realize the reality of the situation here. Money printing, market manipulation, and propaganda have always failed, and today's historic efforts to do that are going to meet an historic failure. And the chinks in the armor are everywhere. It's only a matter of time. So I hope you consider protecting your net worth now while there's still supply out there. And if you do, I hope you call Miles Franklin to give us a chance to earn your business. Our number is 800-822-8080. And as always, you can email me at ahoffman@milesfranklin.com. Thanks.